What if I told you that the very institutions that once called crypto a scam are now secretly stacking it up? By 2026, the financial world could look completely different, and you need to know why. Stick around, because what I'm about to share will change how you see your bank forever. Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that's been bubbling just beneath the surface. Why major banks are quietly getting into cryptocurrency. It sounds like a plot from a movie, right? The old guard embracing the new rebellion. But this isn't fiction. This is the future of finance unfolding before our eyes. Let's rewind a bit. For years, we heard the same old story from Wall Street executives and central bankers. Bitcoin is a bubble. Crypto is for criminals. It's too volatile, too risky. A rat poison squared. As one famous investor put it, they painted a picture of instability, warning everyone to stay away. And for a while, many people listened. The narrative was simple: traditional finance good, crypto bad. But things have been changing, and the change is happening faster than most people realize. The big players, the ones who publicly dismiss crypto, are now making moves behind the scenes. So, what's the big secret? Why the sudden change of heart? The answer isn't one single thing. It's a combination of pressure, opportunity, and the undeniable force of innovation. First, let's talk about client demand. The clients of these huge banks, we're talking high net worth individuals, family offices, and even some corporations are getting smarter. They see the potential for massive returns in crypto, and they're not willing to sit on the sidelines. They're telling their wealth managers, I want exposure to digital assets. When your wealthiest clients start demanding something, you have two choices: adapt or risk losing them to a competitor who will. And in the world of high finance, losing a multi-million or billion-dollar client is simply not an option. So banks started by offering custody services, a way for their clients to safely store their crypto. It was their first quiet step into this new world. The second major reason is profitability. Banks are businesses, and their goal is to make money. The crypto market is a multi-trillion-dollar ecosystem filled with opportunities. There's money to be made from trading fees, from creating crypto-based investment products like ETF, and from providing advisory services. We've already seen this with the launch of Bitcoin ETFs, which brought in billions of dollars in a matter of weeks. The banks saw that and realized they were missing out on a massive revenue stream. By 2026, the regulatory framework around these products is expected to be much clearer, making it easier and safer for them to jump in and start offering a whole suite of crypto services. They're not just holding crypto for clients anymore. They're building entire divisions dedicated to it. Now let's get into the really interesting part: the technology itself. Banks are realizing that the blockchain, the technology that powers cryptocurrencies, is revolutionary. It's not just about Bitcoin or Ethereum as speculative assets. It's about tokenization. This is the process of converting real-world assets, like real estate, stocks, bonds, even fine art, into digital tokens on a blockchain. Imagine you want to invest in a commercial skyscraper in New York City. Right now, that's a complex, expensive process reserved for the super rich. But with tokenization, that building could be divided into 1 million digital tokens. You could buy 1, 10, or 100 of these tokens, giving you fractional ownership. This makes illiquid assets liquid. It opens up investment opportunities for everyone. Banks see this as the future. They want to be the ones who facilitate this tokenization. They want to be the platform where these new digital assets are traded. By 2026, we'll likely see major banks piloting their own tokenized asset platforms. They aren't just buying crypto. They are preparing to rebuild the entire financial infrastructure on blockchain technology. Another key factor is something called central bank digital currencies, or CBDCs. Governments around the world are exploring the idea of creating their own digital versions of their national currencies, a digital dollar, a digital euro, and so on. When these CBDCs launch, who will be the primary distributors? The commercial banks. To handle CBDCs effectively, banks need to have the infrastructure, the expertise, and the security protocols to manage digital currencies. Their secret foray into crypto is the perfect training ground. It's like they're getting a head start, learning how to manage digital wallets, secure private keys, and operate on a blockchain network before they are required to do so by the government. By the time a digital dollar is reality, they'll be ready and positioned as the essential middlemen, just as they are today with physical cash and digital bank transfers. So let's connect the dots. The timeline to 2026 is critical. Regulators are working on creating clear rules for the crypto industry. This clarity is the green light the big banks have been waiting for. It reduces their legal and reputational risk. Once the rules are set, the floodgates will open. The secret accumulation phase we're seeing now will turn into a full-blown public embrace. So what are they buying? Initially, it's the big established names, Bitcoin and Ethereum. Why? Because they are the most decentralized, have the largest networks, and are increasingly seen as digital commodities. Bitcoin is viewed as digital gold, a hedge against inflation and economic uncertainty. Ethereum is the foundation of decentralized finance and tokenization, the digital oil that powers this new financial system. But they won't stop there. As their research departments get more sophisticated, they'll start looking at other projects' protocols that are crucial for blockchain interoperability, for decentralized identity, for secure data storage. They'll be investing in the infrastructure of the future Web3 economy. This isn't just gambling. It's strategic investment in the next iteration of the internet and finance. Think about it from their perspective. For decades, their entire business model has been based on being a trusted intermediary. You give them your money, and they keep it safe and help you move it around. But crypto, in its purest form, removes the need for that intermediary. It allows for peer-to-peer transactions. This is an existential threat to their business. The old saying goes, if you can't beat them, join them. Banks are not just joining the crypto space. They're trying to co-opt it, to absorb it into their existing structures and maintain their position at the center of the financial universe. By 2026, you'll walk into your bank, or more likely, log into your banking app, and you'll see your checking account, your savings account, and right next to them, your crypto wallet. You'll be able to buy Bitcoin as easily as you buy a stock. You'll be able to get a loan using your tokenized real estate as collateral. This integration is the endgame. The secretly buying part is what's happening right now. They can't come out and announce, we're buying billions in Bitcoin, after years of bad mouthing it. It would cause chaos and damage their credibility. So they do it quietly. They do it through subsidiaries, through obscure investment vehicles, through third-party firms. They are accumulating their positions before the rest of the world catches on and the prices skyrocket. They are front-running their own future announcements. This is a massive validation for the entire crypto industry. When the biggest financial institutions in the world, the ones with the most to lose, start placing their bets on this technology, it's no longer a niche interest for tech enthusiasts. It's a global macroeconomic shift. So, what does this mean for you? The average person. It means you have a unique opportunity. You are seeing this trend unfold before it becomes mainstream. The information is out there if you know where to look. While the banks are quietly preparing for 2026, you have the chance to get educated and position yourself ahead of the curve. This isn't financial advice, of course, but an encouragement to do your own research. Understand what blockchain is. Learn about Bitcoin, Ethereum, and the concept of tokenization. The transition won't happen overnight, but the groundwork is being laid today. The narrative has shifted from if to when. And when is looking a lot like 2026. The banks are no longer fighting crypto. They are preparing to dominate it. They see the future, and it's built on a blockchain. The secret won't stay secret for long. If you found this breakdown helpful and want to stay ahead of the biggest trends in finance and technology, make sure you hit that subscribe button. Thanks for watching, and I'll see you in the next video.